Can he hear you? Can he hear me?
All right, I hear you now. I was trying to get this
Yeah,
into the
yeah, yeah. All good, all good.
let's do it.
Okay. Five, four, three, two, one. Drum roll. If I had it, I'd be playing it. There is only one Dr. Anas Al-Hajji, managing partner of Energy Outlook Advisors, stuck in Texas. Is that the way they say it then?
Well,
This
I
is,
can tell you we have this rare snow today.
oh, you do? Oh, we
Yes,
had rare rain the other day, so that's
the
what
school
happens
are
every now and then.
closed and almost
Oh
everything
my
is
God.
closed.
Wow. Well, that could be part of your story. We are here, Anas, in the 12th hour of this round the world marathon. We've had 65 commentators today over 25 sessions, giving us their forecast and outlook for the year ahead. And of course, it wouldn't be complete without you. As one
Thank
of
you.
the leading and energy analysts in the world to be on with us. And so my question to you is put in the sort of talking points that was kind of my key area is to get a perspective of how the U.S. is going to impact the and its and other things, but starting with what may impact OPEC plus decision making this year. And the first thing that comes to my mind is the non-OPEC plus supply growth that is increasingly challenging the sustainability of the OPEC plus agreement. And now with Donald Trump coming to power, and the thing he screams every morning when he wakes up is drill, Bailey, drill. So how is Donald Trump going to coexist with OPEC plus? I welcome your thoughts for the outlook of
Thank you.
that idea
We
in
we did
25.
publish several reports on this with a lot of details. So I'm going to sum it up in a few minutes. First,
Please.
the most important development in 2024, or the most important event in the oil market in 2024, is the success of OPEC Plus. I know this is going to be surprising to many, but what were the main objectives of OPEC Plus from extending the cuts? There were three objectives: market stability, lower volatility, and preventing prices from collapsing. And they did achieve all of them. We have a very low volatility in 2024 relative to previous years. We have market stability and prices are still in the 70s for Brent. They did not collapse. Here, I would like to point out that we have a major problem in the around the world when it comes to the media and oil analysts and those traders and others who are watching. They think that any OPEC plus cut or extension is intended to raise prices. But that's not the case. They always act to prevent prices from declining. So that's a big mistake because some people, and I'm going to say it publicly, basically, some people at Bloomberg basically been saying, "Oh, look, OPEC efforts are were a failure because oil prices did not go up." That's nonsense because their objective was not to increase prices. Their objective was to prevent prices from declining. Anyway, now we have Trump coming to the picture. The most important 2 points about Trump are sanctions on one side and drill, baby, drill on the other. So let's go through each one. Let's go through drill, baby, drill. Trump has a serious problem because U.S. oil production is at its highest level ever. What does that mean is the decline rates are at their highest level ever too. And as you know, we are producing about 9 million barrels a day from shale.
Is
The
that one
decline
and one
rate,
is kind of two? Like because you're producing, you've got more wells, then the decline rates are going to be higher, not for any other reason, just
not the
because that's
decline, the amount of the decline.
the amount of the decline.
The
Is
amount
that
of
a
the
new
decline.
idea, as you think, or is it just because they're producing so much?
No, because shale is known to have very high decline rates. So out of those 9 million, to keep production flat, we need to produce an additional 4 million barrels a day in a year to replace the declines. So most of the investment will go just to maintaining production. This idea of increasing production by 3 million barrels a day is a complete nonsense, but I will tell you where that 3 million barrels a day came from. where the number came from. It came from because someone looked at the previous term of Trump and they saw that it did increase production by 3 million. So they said, we can do it again. But there are more issues because when Trump came to the scene in 2015, interest rates were around zero. Then in 2017, they increased, but current interest rates are 3 times the interest rate of 2017. And we all know that the shale industry basically was fueled by cheap money. The third issue, of course, there are many issues, but I'm trying to sum it up quickly. The third issue and the most important, if you look at the size of the industry in 2015 versus now, the number of companies shrank by 1/3. Employment declined. Why this is important? Because the old model was most of the companies basically are family-owned companies, small companies, etc. Their objective is to borrow money, drill, baby, drill, increase your reserves, increase your production regardless of cash flow, and try to find a whale to swallow you. That's the model.
The whales have swallowed everything, right?
Correct. So the only way to make money is to drill, regardless of the price, regardless of everything else. Now the oil majors took over. Most of those companies disappeared, even the mid-sized companies. So the model itself changed. And therefore, Trump cannot get what he wanted. Of course, there are other reasons, but I will move to the second one on sanctions.
Is there any way, just to finish on the first point, that the oil majors, ExxonMobil, Oxy, would produce more just to keep Trump happy, even if it's going to lose them money?
No, and probably we should have another interview very soon to talk about the true objective of those oil majors. Because if you really go to principles, the behavior of the oil majors have not changed in the last 120 years. It's exactly the same. It's all about control, control, control. And I can go through the details to explain to the audience what are the objectives. And watch out for ExxonMobil right now, because they already announced their plans to 2030, and they said they want to triple the production of the Permian. This is not Exxon plan. This was Pioneer's plan, and Exxon acquired Pioneer. So there is nothing new here. However, after the recent financial results of Exxon, I think they are going to revise down their forecast and their spending. So to go back
the
to
other half of this question, which is the OPEC one.
Well, this is, in a sense, it sounds good for OPEC or OPEC Plus, what's going to happen. But we have to be very careful, because I think analysts miss this point too, that most of the increases in the last 2 years in shale were condensates and NGLs that's being counted as crude. So in a sense, the bottom line is it doesn't matter at the end, because even if shale production declines, it's going to decline on the condensates and NGLs part, it's not on the crude part. So the impact on OPEC either way is very limited.
Right. So the sanctions then are the other half of the Trump play.
Correct. So the sanctions, the biggest story, we don't know what he's going to do with Russia. We are still waiting. But when it comes to Iran, we know for sure he is going to enforce the sanctions on Iran. Now, Trump imposed sanctions on Iran in late 2018. Those sanctions are still on the books. So when Biden came in, he did not change them. He did not remove them. He just ignored them. So now they are still in the book. They need enforcement. Can Trump enforce those sanctions? So what are the evidence? In 2019, the Iranian production declined by about 1 million barrels a day, and their exports declined by up to 2 million barrels a day. So we have the sanctions at that time had a significant impact. Now oil bulls and those who support Trump, they are saying we can replicate that. We can do this again. And the answer is no, they cannot. 2025 is not 2019. Why? Because in 2018, Iran was exporting to more than 20 countries. When the sanctions hit, some of those countries were afraid of Trump, so they stopped importing from Iran. Others wanted to import from Iran, but they want to apply the sanctions, and the sanctions are on payments. So the Iranians said, look, I'm going to produce, I have to pay. I'm going to ship to the ports, I'm going to pay. I'm going to make the shipment, I'm going to pay, but I'm not going to get anything in return because they have to take that money and put it in escrow account in a bank somewhere that Iran might get 20 years from now. So the Iranians themselves basically decided, you know what, I'm going to cut production, I'm going to cut exports. So we've seen this major decline in exports. Now the Iranians already developed a system with China where they can literally circumvent the sanctions on one side, and they have their own payment system that is not subject to the US or any other country in Europe. So they shifted to China, but there was a big problem. The problem is shifting the oil from more than 20 countries to one country meant that some of the crude qualities are not suitable for Chinese refiners. So the Chinese told them, look, I cannot take those qualities. I cannot handle them in my refineries. At the same time, there was something else developing within Iran itself. After the deal with Obama in 2014, they got some of the frozen money, which was a very large sum, and they allocated some to the oil sector. And the engineers basically concluded that some of the oil fields are extremely old and they are costly and inefficient. So we need to close them down. So they planned from 2015 and 16 to close them down in 2019, which corresponded to the sanctions time.
And now, because we unfortunately don't have much time, Anas, because of our slight delay in starting, and I just wanted to get some quick answers. So you don't think they can enforce the sanctions? China won't cooperate. China will continue to take Iranian oil.
This was my second point. The Chinese are going to play the old games where they are going to tell the oil majors and the companies that have connections with the West, do not import Iranian oil directly, while the companies like the teapot refiners and others who have no connections with the West go and get it. And they are going to play that game. They played it before.
And just some quick answers on a few questions. The overarching Trump tariff everybody policy, what impact is that going to have on oil demand globally, do you think?
We got to wait and see whether he is going to impose tariffs on oil. But everything he's talking about, if he implements everything he's talking about, it is inflationary and recessionary. And between inflation and recession, the demand for oil will decline. So this is really bearish for oil if he implements all of that. I don't think his advisors and the deep state are going to let him do that. He will do some small stuff here and there, but it will destroy the world economy if he follows through.
And what about general OPEC plus sustainability through 2025? Is there anything to indicate cracks there? Everybody's continuing with the cuts.
We published 2 reports in the last 2 days basically showing that Kazakhstan basically is improving its compliance. Iraq is improving its compliance. They are not fully compliant, but they are improving. And what we learned from the experience of OPEC Plus in the last 2 years is, as long as you show intention and some action, we will accept that from you.
And when we consider these issues, I mean, Trump is a lot of noise, but won't actually impact on the global trade tariffs and curtail global growth, and he won't be able to curtail Iran in the way that he was before. Where does that leave your forecast for oil prices in 2025 on Brent?
In general term, basically we are neutral, but neutral does not reflect really what we meant. What we meant basically is sideways. Sideways, prices are going to fluctuate within a small range or tight range. Brent in the 70s. That's where we are going to go. We did the modeling several times, and it is very clear that there are no bullish factors and there are no bearish factors that will influence prices either way.
When you say, do you say 70s in the low 70s? Are you saying
No, basically 70 to 80. That's what.
that $10 range? We have a survey question here, which the production team has just posted. What would be the most critical factor in determining the balance between OPEC plus and non-OPEC plus producers this year? OPEC plus ability to maintain production cuts while avoiding significant loss of market share to non-OPEC plus producers, or two, non-OPEC plus countries such as the US, Brazil, and Guyana leveraging technology and flexible business models. I mean, even if Trump doesn't get the majors to increase production in the shale patch, other non-OPEC plus countries will be increasing supply quite significantly, right? Brazil, Guyana, all of those countries will undermine OPEC's plans, no?
2 points. The first point
Yeah.
is these plans are known for a very long time. So they started this, let's say, in 2022 or 2023. So there are no surprises here, and they are incorporated in the forecast. Although just kind of a final point here is I do have an issue with the expression of loss of market share. And the reason why, because economics is one thing, economics of natural resources is another. Cutting production means preserving that oil for future use. It does not go bad if you keep it underground.
No, but what does go bad, or what's certainly costly, and this is one of my questions that I wanted to finish on with you, is this number of that is used, 6 million barrels of idle capacity or cuts. Now 2, 3 years, whatever number of years it's been, can you still consider that as idle capacity that can be turned on with a switch? I mean, what's your thoughts on that?
We do have two different expressions here. We have total capacity and total effective capacity. So the total effective capacity is probably about 3.8 to 3.9 that they can bring online quickly. Generally, they say 90 days. I think the Saudis can bring it below that. And just to be clear here, with Aramco in particular, their spare capacity is a rotating capacity, which is a very important thing, because it's not like the things staying idle forever. No, they do it a rotating way. So these things are alive all the time.
Do you have any expectation that OPEC will be able to bring back some of their cuts this year?
Yeah, it's part of our main scenario in our outlook that OPEC will extend the cut to the end of the year.
They will. They won't bring any of that back this year.
Very tough based on our view, based on demand and supply. It's very tough to see them doing this. And this is, I just want to emphasize the point that in 2024, that was the biggest event for OPEC to succeed in its objectives, because they proved to be very flexible. And that flexibility,
including the UAE the UAE even not proceeding with their quota increase that they have been arguing for many years. That's a big sacrifice on their part. Listen, we could talk all day. You know that. We love you. You're amazing. Anas Al-Hajji, Managing Partner of Energy Outlook Advisors. There's nobody better in the business. Thank you. You're well worth waiting for. Thanks, Anas.
Thank you.
All the best.
Bye.
Shukran Katir. Bye-bye.